Hello, everyone. Welcome to video 5 of chapter 2. Now, we've gone through the calculation of installments payments for both individuals and corporations. In this video, there's not going to be too much to calculate. We're going to just kind of go through certain rules around how long to keep our information, what happens after we file our return. So, information returns are they're not tax returns. What it is they're returns of income. They're information slips, usually provided by a trust or your employer, that inform the government of your income. It's the government's way of being able to substantiate the income you're reporting. So information returns have a prescribed form. They have certain boxes. So if you are filing a T4, box 22, I think, is your tax deductions. In fact, you can actually just kind of jump to that. If I open this up, T4 form. So a T4 form looks like this. Let's visit the page so we can see it on a larger form. So here's a sample. So this is a prescribed form for employers to provide information on your income. So box 14 is your employment income. So how much money you made. I made $60,000. Boxes 16 and 24 will determine how much did you have deducted from you to pay for CPP and EI. 22 is how much tax did they deduct from you. There's also other deductions a person can have. There's union dues. Perhaps you made charitable donations through work. If there's a pension adjustment, if your work provides a pension account, etc. So the number of things that might have been withdrawn from your income in order to pay things for you would also be detailed on the T4. Now, this T4 is provided to you to inform you of those interactions with your pay stub. Excuse me, and they should agree to the pay stubs you've had along the way. There might be adjustments in the final numbers, but generally you should know what you've made that year so you can compare it to the T4. A copy will also go to the government. So this box 14, which says I made $60,000, I file a tax return that says I made $60,000. They can take the tax return and compare it to the T4s that they've received in my name and say, okay, it's all there. If I had two jobs and I have 60 and another 20,000, I file a tax return that says I made $60,000. They can compare it to the two T4s saying, well, there's the 60, but they missed 20,000. We're going to assess them for higher income, more taxes. If they have the information, why do we file our returns? Well, they only have the prescribed returns that are set here. So trust incomes, so when trusts file their tax returns, they identify how much money did they distribute. Your employer has certain incomes. If you have investments with the bank will file T5s to say you've earned this income. But the government doesn't know if I have a personal business. Maybe I'm making money on the side, and they wouldn't have access to that information. So the tax return needs to be filed to confer any income amounts that wouldn't show up on these returns. Or if I wanted to claim credits that I hadn't identified on a TD1, I can file the return to claim additional credits. So they can't rely solely on the T slips, but sometimes they can. We mentioned that there was the simple file where certain eligible taxpayers can just file their tax return over the phone. You can do that if you only have a couple of these information returns to say those are correct. I have nothing else to report. They can then take these slips and say, okay, we have all the information. We'll populate the return using what we have, and your return is now filed. So these information returns inform you and the government of your financial income. Now, again, there's another push to have these returns filed electronically. In this day and age, almost all of them are, so I'm not going to stress too much time on this. So I have filed my tax return. With that tax return, I have my T-slip. Maybe I have some business information, so I have some receipts and expense receipts. How long should I hang on to them? I filed my tax return. It's done. Can I throw all this away? And the answer to that is generally no. 6 years from taxation year to which records relate. So if it's 2024, 6 years from there is 2030. So you'll want to hang on to those records for your tax return until 2030. The reason for this, the 6 year count starts with the year following the year in which the record is no longer relevant to the business. Meaning, because my 2024 income isn't filed until 2025, then we probably want to go 6 years from that date, assuming I filed on time. So 6 years from 2025 is 2031. For this reason, public accounting firms say 7 years. We have 6 years plus the year after, which is no longer relevant. So we often advise people hang on to your stuff for 7 years. The reason for this is because the CRA has 3 years after an assessment is issued to decide if they choose to audit. But that 3 year clock can be reset if there's a reassessment issued. So if there's an initial assessment and then after 3 years, they provide another reassessment based on some review, that can reset the 3 year clock, but that only happens one time. So 3 years plus 3 years, as long as you filed your tax return reasonably, the CRA only has a maximum of 6 years from that time to do anything about it, to audit you, to ask for additional information. So hang on to your stuff for 7 years just to be safe, but 6 years is the official rule. The prescribed retention period of corporate records is 2 years from dissolution date. So once I've finished my business, I've wound up a corporation, still hang on to everything for 2 years in case the CRA wants to double check it. So there's the Tax Act provides authority that allows the CRA to audit books and records. So the CRA says, hey, you filed this information on your return. We'd like to come and double check a few things just to make sure you're filing appropriately. The CRA website, My Account Service, has an autofill my return. So if you want to file your return online through CRA's website, you can have it autofill based on the T-slips that they've been given. So these information returns are often referred to as T-slips because each one begins with the letter T. So T4, T5s, if I withdraw from an RSP, it's T4 RSP. There's also T4As, T4 AP if you have CPP payments. So we have a lot of T forms that provide information on the return. So autofill will just take the filed T slips with the CRA, put it into return. Includes access to notice of assessment, RSP, TFSA contribution limits, installments paid. So you can go to your account on the CRA website. Every year, what you can contribute to a TFSA is updated based on your tax return, how much you can contribute to an RSP. So if you want to see your balances of all these various things, it's included on the online account. You can view history of documents submitted to the CRA. You can see a history of mail that's been sent to you. If you think you've missed something, the CRA has mailed you something and you've missed it, there's usually a copy available on your My Account. And if you have penalties and interest, let's say you filed return late, but there was a reason for it, like I got hit by a car, I missed the due date, you can send a request to say it was extenuating circumstances that kept me from filing. Please forgive me. And they might remove the penalties and interest, as acknowledgement of your situation. So after you file a return, they will give a notice of assessment provided after tax return processed by the CRA. It contains amount, if any, taxes to be paid or refunded, explanation of changes, interest and penalties assessed. So a notice of assessment is I filed my return. Here's all my information. I owe $12,000. The notice of assessment is the CRA says, we've looked through your return and we agree with what you filed, so please pay the $12,000. Or they might have certain changes to say, you filed tuition tax credits, but we have no tuition tax credits on file available for you. So we've removed them from your return. Now you owe 12,600 or whatever it comes to. Reassessment and statutory limits. A more detailed review is done after the notice of assessment is issued. So notice of assessments are often very quick. If you file electronically, sometimes they're assessed electronically. So you'll get a notice of assessment very quick, and then the CRA has an amount of time available to them to do a reassessment, to take a closer look at the return to make sure nothing was missed. Use of matching programs, complex algorithms designed to help identify compliance issue. Just saying is they have programs in place to help flag and identify returns that might need a bit more scrutiny. So the Income Tax Act contains a statutory limit referred to as a normal reassessment period. This period begins on the date found of the initial notice of assessment. So I filed my tax return. That initial notice of assessment is the CRA recognizing they've received a return, having a preliminary view at it, saying, okay, we don't disagree with anything, please pay the $12,000. Once that notice of return is filed or mailed, that's the start date of 3 years. So for individuals, trusts, and CCPCs, they have 3 years to do a more in-depth reassessment. If they miss that 3 years, they can't do it. But if they have a reassessment done, that can restart the clock to say they have another 3 years to do some further details. So this 3 years can reset. And that's why you hang on to 6 years, but 3 years is generally the limit. You have 3 years to file your return or to reassess the return. The CRA can revise income tax payable within the normal reassessment period as many times as they wish. So sometimes you and the CRA might get into disagreements. The CRA says, well, we don't see any tuition credits on file, so we've removed them. And you can go back to the CRA and goes, no, 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 no. Here's my slip from Fanshawe saying these are the tuition credits paid. Please put them back on. And the CRA can say, okay, we've put them back on, but we've also had a look, and you know what? We don't think this credit, or we think you didn't report certain bursary income. So we've changed your numbers again. And you might go back and say, and you can have this back and forth. So they can reassess this period as they can have a normal reassessment as many times as they wish during this 3 year period. If an income tax return is not filed for a specific year, the 3 or 4 year basic limitation does not start. It does not start until the tax return's been filed and that initial notice of assessment has been issued. So for most of us, it's 3 years. Public companies have 4 years that the government can go back just because public companies are so big and large that you might need more time. Now, the CRA can reassess outside of that 3 year period. So if they believe there's misrepresentation attributable to neglect, carelessness, or willful default or fraud. So the CRA says, well, we've missed the 3 year period. We can't reassess. But hold on. It looks like you've intentionally lied here. Well, you can't avoid a crime just by saying, well, too long, that 3 years passed. So they can go beyond that 3 year period if they believe a crime has been committed or a negligent misrepresentation has been performed. Now, the taxpayer can file a waiver. The waiver valid until revoked by taxpayer, in which case it lasts for 6 months from that time. The government might say, okay, we're coming up on 3 years. We haven't reassessed your return yet. Could you agree to give us more time? And the taxpayer might say, nope, 3 years is all you get. Haha. Or they might say, yeah, that's fine. I'll waive an additional 6 months, whatever. But why would a taxpayer do this? A taxpayer does this because generally it's good to cooperate with the CRA. If the CRA does not get that additional taxpayer time, that additional waiver, then they might reassess quicker and just say, okay, well, we're going to make a handful of assumptions and we're going to remove certain expenses. Not that they're doing that to willfully punish you, but getting accurate audits sometimes takes time. And so taxpayers might say, okay, I'll give you the additional time because I think it's correct and I want you to have a chance to double check that. So taxpayers will file a waiver in order to be cooperative with the CRA because maintaining a good relationship is often makes the process smoother. If the government owes you a refund, it's issued only if income tax return for the specific year is filed within 3 years from the end of that date. So just like the government has 3 years to check your work, you have 3 years to file a return to get a refund. If an individual is entitled to a refund in 2022, the income tax return for 2022 needs to be filed before the end of 2025, 3 years later. So if you haven't done your tax return in a couple of years because, oh, I think I owe, I haven't really done it, or maybe I know I have a refund and penalties are based on balance owing, so they're not going to bug me or anything. Okay, but if you want your money, get that return in. If return is filed after January 1st, 2026, there's no refund. Even if the return says, oh, it turns out the government owes you money, you're too late. So in the same way that we hold the government to this 3-year deadline, individuals are held to that 3-year deadline as well. So you can't save up 10 years of tax return and get a big refund payout. Taxpayer relief available for individuals and gradual rate estates, not corporations. So taxpayer relief being some forgiveness for penalties and interest for late filing. Corporations often have accounting individuals whose job it is to make sure their compliance is on time, but individuals and general rate estates are often administered by individuals. For estates, it's executors, which is often just some person. And so that person can have things happen to them. Maybe they get in a car accident. Maybe they're going through something else, a divorce, and the legal requirements are just so arduous that they can't find the time or they don't have the know-how to do this. You can request that certain relief for penalties and interest be given. But the CRA will reserve the right to make that choice. Individuals in most trusts, if you are owed a refund, you get a base rate plus 2%. If corporations are owed a refund, they apply the base rate. So interest begins to accrue 30 days after the balance due of April 30th for individuals, or 90 days after the tax year end for trusts. So if you filed your tax return on April 30th, the refund needs to get paid to you um, before 30 days after, so before May 30th. So the government has 1 month to get you your refund in time. If they don't pay the refund out within a month, then the interest is going to begin after that. So after the balance due April or 30 days after the day on which income tax return for that specific tax year is filed. So if you filed your tax return on time, April 30th, 1 month later, it's when the interest will start to accrue. But if you never filed your tax return, I didn't file my tax return until October, okay, well, we'll go 1 month after you filed your tax return. For corporations, interest begins to accrue 120 days, about 4 months, after corporation year end, and 30 days after return is filed, if filed after 120 days. So if we file our return after 2 months, they have until 4 months after the year end to get us our refund. If we file the return after that 120 days, so let's say if we file the return 6 months later, which is 180 days, they have to get our return, pay our refund back within 30 days. So they have this 1 month grace period. Only after does the interest start accruing. So I filed my tax return, but maybe I made a mistake. Maybe I've missed a credit. I've done this for myself. Individuals can request a change online through the CRA website. CRA website for my account has an option where you can kind of see the lines of your return, and you can click on a specific line and say this number should be this instead, actually. I did this a few years ago. Ontario had a credit for staycations. So, in order to improve domestic tourism, if you stayed in a campground or hotel, you could apply the what you paid for it and get a credit back for it. Now, at the time I did the return, I didn't. It was by the time I did my return, they were still kind of just publishing this information of the credit, so I didn't have the information or know about it in order to do the return. But after I heard about it, I was like, oh, no problem. So I went to change my return. I adjusted the numbers for this campground that we had paid for the year before, and I was able to get, just a few dollars back. Why not do it if you're going to get money back, right? So if you don't have change your return, you can file a T1 adjustment form. These forms are available in Profile, or you can just download a T1 adjustment form online, which basically says I'm changing these specific lines in my tax return. It's going to change my balance owing or refund by this many dollars. So reassessment of a return of income sets out conditions. CRA will accept adjustments. CRA is usually pretty welcoming of adjustments, especially if you're able to file that adjustment. Like I file my return in February. If I'm able to file an adjustment before April 30th, it's usually not a problem. As long as I'm not using those adjustments to save money, right? So if I after April 30th, my due date If I adjust my return later and it turns out I owe more money, I probably won't have a penalty because I did file the return, but I will likely have to apply interest. So maybe if you're waiting on some information and April 30th is coming up, it might be worthwhile to just file the return with what you have and then adjust the return a few weeks later to just avoid those penalties. But the CRA makes it very clear the onus is on the taxpayer to prove what the CRA change is incorrect. The CRA has their information that's been given to them by, employers and banks. They know your income. They generally know what credits you apply to. So if they don't have a disability credit letter on file, they're not going to give you that credit. So if you filed a tax return and claimed that credit, the CRA would probably reassess and take that credit off to say, no, you owe more money. The onus is on you as the individual to provide the information. You would send it back saying, no, I do have a letter. Here it is. It's dated for this time. I have a slip saying I tried to submit it, or maybe I did submit it to the government. Here's the record of that submission. I do have that credit. And they might say, oh, okay, we've looked into it. Yes, it's here. We'll reassess putting that credit back on. But the CRA will make changes to your tax return on the assessment, and it's up to you to prove that you are correct. So you need to send in the information. I do have tuition credits. Here's my slip from Fanshawe. I do have a disability credit. Here's my letter from the doctor, and everything like that. The onus is on the taxpayer to store and collate and basically provide the necessary proof that what they said on their tax return is the correct amount. Now, if the government if the government says that there's an expectation fraud has been committed, so, well, no, we're reassessing because we think you lied, then the burden of proof shifts to the Minister of Finance. So the burden of proof's on the taxpayer for their return. If it gets to the point where the CRA says, no, I think crime is being committed there, it's on to the CRA to prove the fraud. They can reassess for a change in the return, but if they want to push that this was a fraudulent misrepresentation, then the burden of proof shifts to the minister. Okay, so this is a video, just a bit over 20 minutes, just about those various rules around the onus and refund limitation periods. When we come back, we'll go further into if I have a dispute with the government, what steps do I take? Thank you. See you in the next video.